Well, we'll skip international business stories to quickly look at Kenya's legal tender, even as we know that Kenya's shilling gave up some of its gains in afternoon trading on Thursday after traders said the central bank bought dollars to curb volatility as the currency surged to its strongest level since June 2023. Now, the central bank says it only intervenes to smoothen out volatility when the shilling is moving too fast in either direction. At about 12:50 GMT, commercial banks quoted the shilling at 145. 146 in some areas to the US dollar, up more than 3% on Wednesday's closing rate of about 150 to about 151 to the US dollar. Now, joining me at this point to talk about this is Professor Iraki, economist and lecturer, University of Nairobi. Professor, it's nice to have you around. Now, at one point on Thursday, the shilling was up almost about 8% on the day, bidding as strong as 139 to the US dollar. Now, is this directly or otherwise related to the inflow of loans and maybe bond activities of the CBK?
Yeah, good afternoon. One of the big debates that is taking place on the streets of Nairobi is why the shilling is appreciating. The policymakers, economists, ordinary people asking, why is this value going up? One probable explanation is that Kenya was able to repay back a part of its Eurobond that is due this year. And that probably cheered the market. So when everybody realized, investors and other people, that Kenya is not going to default, the market cheered up. And that had a very positive effect on the Kenyan dollar. The other reason is that the government of Kenya has floated a bond, and the bond was oversubscribed. So that has also put some dollar inflows that have put a very good demand on the Kenyan shilling. And by extension, the Kenyan shilling has become very strong. Other people think that the government, the central bank has also played its role in stabilizing the Kenyan shilling. That's why it is gaining out of strength. And the people are very excited because they believe that if the shilling becomes strong, the price of oil will become cheaper, the price of imports will become cheaper, and by extension, inflation will go down. And people are looking forward to positive gains from a strengthened shilling.
But then, Professor, could these expanded debts not be a burden in the future, or rather probably a bulk not being pushed down the road?
That's what everybody is concerned, that we are using expensive debt to settle cheap debt. So in the next few years, when the board is retiring, we shall go back and maybe buy the same debt more expensively. So we need to have a sustainable way to solve the debt problem instead of using debt to sort the debt issue. So I think it's a major concern, but for now, the market sees the redemption of Eurobond as positive.
Well, it's been said that the apex bank in the country is a bit myopic, even as the CBK had reported more liquidity for the agricultural export sector. And a lot of people are saying, shouldn't the focus have been more on this rather than reducing borrowings?
Yeah, that's why we are concerned that the rally in the value of the shilling is probably temporary. We need to come up with a long-term solution. And one of the long-term solutions people are thinking about is making sure that we have more exports. So whether it is tea, whether it is coffee, whether it is anything that we manufacture in this country, we should increase our exports, because in the long run, that is going to give us more dollars, and that is going to strengthen our shilling. So I think the ladder we are seeing in the market is probably short-term, but we need a long-term strategy, a long-term plan to make sure that the shilling does not depreciate in future as it has done in the last few months or the last 1 year.
But then at the moment now, has the Kenyan shilling found its base, or rather, is it more stable now to ease pressure on the Kenyan economy?
I think that the jury is still not out. People are speculating whether the shilling will become stronger than it is. Others are saying it has found its equilibrium position. But the Central Bank of Kenya governor last 1 or 2 weeks ago said that the shilling had overshot its equilibrium exchange rate, but he did not specify what it is. So as far as we are concerned, we are not sure what the equilibrium exchange rate is. But the good thing is that the shilling seems to be left to find its own level through the market. What we don't know is what that level is. Maybe in the coming weeks or so, we'll find out which is the stable equilibrium when we reach it.
So considering this new FX liquidity, what are your projections in terms of what you make of the monetary policy meeting that would come up in terms of the interest rates? What are you expecting from them?
I think if you remember, in the last 2 months, the Kenyan interest rate has gone up by twice, from by about 2%, then another 0.5% to about 13%. And since one of the targets of the monetary policy was to make the shilling appreciate and stop losing its value, and now it has gained its value, then I think the next monetary policy committee meeting will probably leave the interest rate as they are, but I don't see them reducing the interest rate in the short run because inflation is still not completely tamed. We may get a stable exchange rate, but I think we are not very sure whether that's going to be sustainable in the short run or not. So I think they will leave the interest rate the way it is.
Finally, Professor Iraki, now the funding issues being witnessed by banks in Kenya have been on for some time now. So what direction do you think the CBK should take concerning open market operations at the next MPC meeting?
Yeah, that's an interesting question because one of the questions people are asking is the Kenyan shilling becoming strong because of open market operations, or because of the inflow of the money from the board, or because of the payment of the euro board? We are not sure which of those actions have made the shilling stronger. But I think what is coming clear is that the open market operations seem to be working, and maybe in the future the central bank will probably rely more on the open market operations monetary policy. But I also think the government should also focus on the fiscal policy so that the two work together to stabilize not just the shilling, but the economy and make it grow.
Professor Iraki, economist and lecturer at University of Nairobi, thank you so much for your insights.
Thank you and have a good afternoon.
And you too.